Good afternoon and welcome to the Asian Midday Marketwatch. Our guest today is David Kuo, the founder of the Smart Investor out of Singapore. David, as always, great to have you on the show.
Yes, good afternoon to you. Friday. Yeah, thank God it's Friday.
Yes, thank God it's Friday. Now, before we get your insights, let's take a look at how the crypto markets are performing. Then we're going to take a look at how the regional markets are performing, and it's a sea of green today. But let's start with cryptos. We've got Bitcoin, which is at 59,613.2. It's up 2.81%. So just about to bridge that psychological 60,000 barrier. Now, Ethereum is at 3,803.18. It's up 4.07%. Now, looking across regional markets, Nikkei is at 28,934.8. It's up 1.34%. The Shanghai Composite is at 568.67. It's up 0.29%. The Hang Seng is open today. It's at 25,170.47. It's up 0.83%. The AXX 200 is up 0.72% at 7,364. The Kospi is up 0.9% at 3,013. Now, closer to home, we've got the SGX, which is at 3,177.22. It's up 0.39%. And rounding up the numbers is the Bursa Malaysia FBM KLCI, which is at 1,596.7. It's up 0.26%. So, David, what's your view on market performance this morning across the region?
Brian, I can't help but detect a sense of joyfulness in your voice just because stock markets are up. I mean, you are completely different to me because I'm actually quite sad that the stock markets are up because
you can't buy cheap stock.
Well, exactly. I mean, I would much rather them be a little bit lower so that I can reinvest all those dividends that I collect almost on a daily basis. So it really just goes to show how the mentality of people with regard to the market is so diverse. You have people like you who are happy because the stock market is up, and you have people like me who are probably a little bit sad because the stock market is high, and it means that when I do reinvest my dividends, it's going to cost me a little bit more.
Now, David, one of the reasons for this euphoria is obviously the S&P 500 surged more than 2% overnight, and that was largely because of better than expected earnings from most of the big firms, particularly firms such as Bank of America. Could you tell us a little bit about that?
Well, okay. I mean, we had the big banks reporting. So we've heard from companies such as JP Morgan. We've heard from Citibank, Bank of America. So we've heard from Wells Fargo is another one. We've heard from a few of the big American banks. And we still have one more to come, Goldman Sachs, which will be reporting later on this evening. And when you have a look at the results, in general, they look okay. When you drill down into the results, it is a bit of a mixed bag because loans, which is really what drives corporate profit, bank profits, have not really sort of been that great. And you would expect the banks to be lending more money as we come out of this recession, this pandemic-caused recession. But it doesn't seem to be happening. So people begin to wonder, why are people so euphoric over the bank results? The answer is there's been a lot of M&A activity. And when you have a look at what's been driving those bank profits, is really because of mergers and acquisitions.
So it's fee income.
Say again?
So in that case, it's fee income that's driving it.
Well, primarily it's fee income, but when you have a look at the sentiment behind that, what seems to be happening is that corporates are quite confident about what is going to be happening in the future. Otherwise, I mean, if they weren't confident, they wouldn't be going out to the banks and saying, find me some acquisition and merger partners out there. So I think what it seems to be happening is that corporates are very confident about what is going on. And that confidence is really sort of driving the stock market at the moment. And the rest of the world are sort of saying, yeah, the consumers will come back eventually. But over the last 18 months, what consumers have been doing is to pay down their loans, pay down their debts, because they haven't really been going out and spending a lot of money because there's nothing to spend it on. And they've been paying down their debts. So when you have a look at the next, say, 12 to 18 months, I should think the consumers will start coming back. They will start borrowing money. They will start spending on their credit cards again. And the corporates are ready because they've already done all their M&A activity and they're ready for the next phase as we come out of COVID-19.
Now, David, I want to talk about something that took the market by surprise yesterday, the actions of the Monetary Authority of Singapore. What's your view on that?
Well,
And its impact?
the one thing we can say about the Monetary Authority of Singapore, or MAS as we call it here, is that they are very cautious. And what they seem to be seeing is that there is inflation out there. Whenever you turn on the TV and you turn on the financial channels, they all seem to be on different pages. You have those who are saying that inflation is only transitory. You have those that say, no, we think that inflation is going to be fairly embedded and that it's not transitory at all. But I think in the case of what MAS is saying is that we think that there is inflation in the system. They don't think inflation is going to be that bad, but there is definitely going to be some inflation in the system, primarily because of these bottlenecks that we're getting, these supply chain disruptions, and also we're sort of seeing oil prices at the moment going up above $80 a barrel. So all of this starts to feed into inflation. And for those people who say that inflation is transitory, I tend to disagree, because if I am a worker and I see that prices are increasing out there, the things that I buy on a normal daily basis, such as filling up my car with petrol, looking at my energy bills, they're all going up in price. I'm going to say to my employer, don't you think it's about time you paid me a little bit more? And the moment you start increasing wages, that becomes entrenched. You can't take away wages after you've actually sort of paid them. So
yeah, and David, I agree with you, because it's economics 101. Prices are sticky downward.
Yeah, absolutely. So I don't buy into this idea that it's going to be transitory. Yeah, maybe some things are going to be transitory, but in general, the moment you start paying people a little bit more in wages, that is stuck. I mean, that is going to remain. You can't say next year, inflation is moderated, so I'm going to adjust your wages downwards. It doesn't happen like that. So I think what MAS is telling us is that there is inflation in the system, and my take from that, Brian, is that even if inflation is only 2%, it means that something that you buy today for $100 is going to cost you $102 in a year's time. I mean, that is manageable. I mean, that is not really going to change your life just because you've got to fork out an extra $2 for every $100 that you spend now. But the problem is that with 2% inflation over the long term, it will eat into your savings. So if you've saved $100,000 today, in 30 years' time, that $100,000 with 2% inflation is only going to be worth around sort of 40-odd thousand Singapore dollars. In other words, somebody has just taken a chunk out of your savings, and that person that's taken a chunk out of your savings is called inflation. So, which is why I think people should recognize that even 2% inflation is too high for me, and that is why I need to put my money into inflation-beating assets.
Now, David, as always, thank you very much for your insights.
You're welcome. Thank you.
Now, we've been speaking to David Koh, the founder of the Smart Investor out of Singapore, on Biztech Asian Midday Marketwatch. I'm Brian Fernandez. This video will be on our various social media platforms, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.